how do we manage a position when in between trade and trend? So this, in this case, was geared around the dollar, right? And there's been a lot of questions about foreign currency and the dollar. Keith highlighted the trend range on the dollar this morning, along with the euro, the USD Japanese yen, and the pound versus dollar as well. So definitely go. I tweeted this out, but make sure you go write those down. Very important when he takes the time to send that out to everybody. He also gave the trend lines on the 10-year for the US 10-year, the German 10-year, and the UK 10-year. So make sure you go kind of review all those. But let's dig into this question, right? So this is around the dollar. I am going to touch base on kind of phase transitions and regime shifts here in a minute. That's kind of the question I'm going to end with today. But let's focus kind of on the dollar, right? So as the signal weakened and the top end of the risk range started to put in lower lows and lower highs, highlighted on the macro show on November 16th, you'd really start to shrink your position size. And again, this kind of goes back to, my comment about kind of having all the tools in the toolbox. If you did have the re-rank product, you would have seen that Keith sold 100 basis points of UUP on November 17th, and again on November 18th, and again on November 21st. And then he sold 150 basis points on November 22nd, right? So if you kind of take that and you go look at where those were in terms of kind of where you were within the risk range and stuff like that, that would have been a clear indication as to, how things were shifting in his mind within the signal. Now, the interesting thing is, but he did add 50 basis points on November 23rd. So he sold 100, sold 100, sold 100, sold 150, and added 50 back the next day, right? Yet, while he was doing all that, UUP remained a number one asset allocation within his long-only portfolio and has remained that way to date, right? So it remains a number one, asset allocation in terms of size, position sizing. That's how they're ranked. So hopefully that helps. I think the other thing to note, right, is where the top end of the risk range and the low end of the risk range is in relation to trade and trend levels, as well as to the trailing 1 and 3 month highs and lows. So I just kind of talked about highs and lows on the Russell, but let's jump into, if you go to that next slide, Daniel, I can kind of talk about what this is more in relation to the trade and trend levels. Now, again, I know we don't always have the trade and trend levels, but in this case we do. So this is the risk range for this morning on the dollar. So this is the Dixie, and what you'll see is that the low end of the risk range, okay, the bottom of the red, is significantly higher than the trend line of 103.11. Now, the other, conversely, the top end of the risk range is above the trade line. So we're kind of squarely in this sort of like in between zone, right? But we're certainly probing closer to the low end of the risk range. And I think what you have to be conscientious about, or I guess when you combine that with the RTA of adding to or buying some more UUP yesterday, kind of gives you pretty clear indications where you think where Keith thinks the signal is going, and the fact that dollar remains a core asset allocation within really any quad four, but especially in this environment and how well it's performed year to date. I think the other thing to note here, and this is kind of another reason where I like kind of using these Dogecoin channels just to visualize it. It's just purely for visualization, right? In terms of, where is the top, the most recent 1 month high. And in about a week's time, that 1 month high is going to drop from where you see it today, in terms of just time and space. And it's going to move out towards kind of that new purple box that I kind of put into onto the chart there. And the high is going to be 107.75. So although right now the top end of the risk range is not indicating a new 1 month high, in about a week, that, if all else stays equal, now, these are dynamic ranges, it's very possible that things are going to change completely in a week's time. But in a week, if all remains equal, that 109.66, that top end of the risk range is going to be a significantly higher 1 month high if we get up to that, if we get up to that range, right? So just wanted to kind of highlight that and sort of, comment about how you can kind of, think about where we've come from pricing and what that means in terms of as we kind of move further out in space and time.